All right, then, let's rock and roll. Um, as people know that read my weekend commentary, I'm actually along the bonds and long the notes. So I'm having a good little morning here. I'm short the euro. According to Neil, there's supposedly an announcement coming out at 10 o'clock, so the euro's unchanged. Um, hey, it is what it is. I had that euro chart up here before. Um, I don't like the looks of the chart, and I think the chart is telling me something. But let's move on to my. I do have some positions on today, so if I seem a bit scattered, I'm kind of watching the markets a little bit, and I'm also I'm also looking at this. I mean, as you know, this Apple. How can you like Apple? I mean, you just can't like it. It's it's still at the levels that it's trading is still up what 30-40% on the year. You don't buy. I know. How about it, Chet? You don't buy. Not when the market's turned. You don't buy stock. I don't care if it's Apple. I don't care what it is. You don't. If it's, at this point in the year, you have to remember. You have to think about this. Is let's say Apple is up 35%. When's the last time a fund manager returned 5% on your money? 35% is like, okay, you take the average from 2008 to now, and they're probably still down considering what they lost in 2008, 2009. So to return 35%, 75% at the $700 highs on your money, if they didn't take a 75% return on investment, they really got to be thinking about, okay, if this Apple gets to be a 25% return on investment, I mean 25% puts the stock at, what is that, 25% of $500. So if it starts trading below $500, they have to start really thinking about, well, I mean, I've got to lock these profits in eventually. But I don't know. I'm not. I think the market, and I can talk about this because this is my show. But I think the market gave us a real huge warning payroll Friday, which was like 8 days ago, something like that, 10 days ago, when those better than expected payroll numbers came out, and the market opened up 50 higher and the Dow closed 139 lower. That that was the first indication to me that, well, besides in trade every week having Obama just absolutely smoking the election. But those numbers there told me that, yep, Obama's going to be our president, and let's do like we did in 2008. Let's just sell it. And I don't know if there's anyone new in the room that has not heard my story, because Obama obviously was not even inaugurated until 2009. But on January 3rd, 2008, it was the first Democratic caucus, the Iowa primary. And Hillary Clinton, the favorite, took third. John Edwards took second, and Obama smoked the field. This was in January 2008, and the market went straight down for 14 more months. So who's to say this is going to be any different? And like I wrote in my weekend commentary, and for people in the room that don't subscribe, you the best thing you can take out of my weekend commentary is keep an eye on the yield curve. Last week, the yield curve flattened in a major way. And a flattening yield curve indicates one thing: recession on the way. When the yield curve begins to become inverted, like it did in 2007, then look out below. So the difference now and 2000, 2007, 8, 9, we can't lower interest rates anymore. They could keep on driving down the 30-year rate, but if the market starts to come off, the Fed won't need to drive down the 30-year rate because the flight to quality in let's just buy U.S. Treasury bonds will do it for them. There's no bullets left. They've been buying bonds forever. If the stock market really takes a turn for the worse, and we really truly do go into a nasty, I wrote in my commentary, you've heard of QE1 and QE2. You've also heard of the Great Recession. This could be the Great Recession too. And I don't know. Keep an eye on the yield curve. And at the moment, I see the bonds are up 8 ticks and the notes are up a tick. So what's that telling you? The yield curve is flattening even more. Keep an eye on it. Anyhow, let's get to my favorite chart here. This is my 10-year note monthly chart. We know about this. This is a perfect, beautiful channel. Sold off here, tested it here. We haven't sold off anymore. We traded sideways. We broke up above it. You know me, I always look for 2 consecutive closes above a breakout. We got one here, came back off. Got another one here, came back off. Then we started trading below here. And what did I write? Oh boy, and I'm so bummed out too because I had bids in this 10-year note. This high here is 131.12 and a half. This high here is 131.09 and a half. This high here is 131.14. This high here is 131.16 and a half. Those are highs of monthly highs. That was resistance, and what used to be resistance now turns into support. And I had bids in from 131.10 to 131.16, and these 2 lows here. I think this is 131.23. Yes, it is, and this should be 22. 131.22. Boy, we came damn close. I mean, to within 6 ticks of buying this market. So I didn't get it bought, but I'm long it now, and I think we're going to see this market continue higher now. I do believe because of that possible double bottom that I put out on the 10-year daily chart, and we'll have a look at that shortly. The possible double bottom gives us a target of 136 even. I'm pretty sure this high here is 135.15 half. 135.15 half. So that means that would be new all-time highs. If what we need is 2 convincing closes above the breakout area of 133.27. I'll show that to you later, but this is telling me, we even have a, shall we say, well, this our double bottom here, but this is telling me we're going higher, and you don't mess with this. This is no one believes. I was just in Twitter this morning saying, how's all you bond bubble, how's that bond bubble working for you? It's like I wrote in my weekend commentary. You know what? Try selling a few bonds and see how it feels to be short. Right now the bond is trading, the intraday high is 150, 130. They're 27 bid at 28. You could have sold this market anywhere between 150, 113 and 150, 120 unchanged, and now you're taking heat. How does that feel? S&Ps are, what are they, unchanged on the day? Maybe they're a little bit lower. The Nasdaq's not playing again, and you want to be short the bonds? I'm sorry. I put out a new target in my weekend commentary, and I'm going to hold to it. And eventually, I think the bonds are going even higher than that. But we'll take it. 1 year at a time. That's that monthly chart. It doesn't lie. I'm sorry, it doesn't lie. So. I have written on my card, let's go to here's that double bottom we were talking about. This is the daily 10-year note chart. And as people are here in the room who aren't subscribers, I unfortunately, and I apologize to my subscribers, but I forgot to put out a chart, sent out an email with the password. So I don't know if Morgan ever took the password off or not. But this is definitely a possible double bottom. But I need two consecutive closes above this 133.27 area. This is the breakout level right here. And what you do is you measure from the double bottom to the breakout and you add that on. So if the double bottom level is 131.22, you take the difference, which is 2 full points and 5 ticks, add 2 full points and 5 ticks onto 133.27, and that gives you a target of an objective, a double bottom objective of 136 even. That's how you measure double bottoms. A double bottom is also a reversal pattern. There are three stroke four reversal patterns in technical analysis. You have double tops, double bottoms, head and shoulder tops, head and shoulder bottoms, broadening tops, broadening bottoms. Broadening tops and bottoms are very rare, but they do come on time. And then one of my favorites is, and it's not really a reversal pattern, but it's one of my greatest indicators in technical analysis are the island tops and bottoms because they're basically a 2-day move that'll just blow, you know just premium moves, big moves, especially the first day of the breakout, and they're big money makers. So anyhow, so here's our possible double bottom. You can see we traded above this 133.27 level on Friday up to 046 half. Friday it closed at 133.29. On Thursday it closed at 133.27 half. So technically, yeah, I know, Susan. I put it out there too. So technically, we did get two consecutive closes above the breakout area of 133.27, but I prefer them to be a little bit more convincing. Like if they were, if one of the closes was 134 even, maybe 134.02, 03, then I'd say, okay, we're off to the races. And that doesn't mean that we're not off to the races. I mean, look at this stock market. It's not acting too good today after opening higher again. Another rally that's failing to hold. Um, if this stock market continues lower today, I haven't seen Apple in a while, but we'll pull that up shortly. If the stock market continues to erode today, these bond markets are going higher, and you just don't get in the way of it. I'm telling you, Apple's off $4. Last I saw Charlie was up like $7. Oh wow, yeah, yeah. There you go. Yeah, it had a high of 554 half. So yeah, it was up $7. Sold, sold. They all love it. They all love Apple, and we'll pull up that Apple chart in a little bit. But let's get this bond chart up. I can't even remember why I wanted to put it up. Oh yeah, I know why. I wrote in my what did I do here? I thought I had. Oh, there it is. Okay, cool. Let's get rid of this. I will just leave this here. Anyhow, I wrote in my weekend commentary. Sorry about the writing on the charts, but this that's what I do. Sometimes I leave the writing there to remind me of stuff I'm looking at. I mean, it's getting to the point now at the age of 56. I sometimes walk in the kitchen and I go, okay, what did I come in here for? So sometimes you need that little reminder. Anyhow, I wrote in my weekend commentary that I felt, and this is why I bought this bond market on Friday before Obama's announcement. um, I felt that we were seeing something very similar to this. These March lows, and first off, and we remember this. I mean, this double bottom. This is when everyone was calling this a bond bubble. It's not a bond bubble. Look what they missed. They missed this huge, huge rally. We were on this. I'm sorry, sports fans. No sound. Chet, are you sure? Are you the only one with no sound, Chet? Anyhow, yeah. Sorry, Chet. Well, Yeah, well, I don't know. I got a funny feeling sometimes this headset isn't the, it wasn't a great idea, but it is what it is. Is it intermittent for everyone or just a chosen few? You know what? Bent I just bent the microphone to be closer to my mouth. So okay, great. All right, let's get back to work. Anyhow, you remember this little move here, and this to me was kind of a key. I mean, we had the double bottom, we had the pullback, and then the market took off. And these days here, one, two, three, four, five big days in a row was like, oh, this is for real. So I come back here now, and remember, I'll kind of try to leave this. So remember what this looks like here. We have this down here. That reminded me of this. Then we had the little move up. We had the little move up here, the pullback, and now we've got one, two, three. I'm waiting for four and five, and I think today you continue to see these. You continue to see, but it's just this whole little. This looks like this. This rally looks like this. The pullback looks like this, and now we're spiking. So I'm long. I'm long, and that's why I put out what did I put out? I think a 163 target. And basically, I just measured from here to here, and I did the same thing. Added that onto here. I mean, that's it's not brain surgery, and I think we're going there. I think we're going there, and I think it could happen a lot quicker this time than it did here. Um, Only because this move wasn't on the back of weak stocks. I think this next move will be on the back of weak stocks, and and we're getting our play here. So just remember this double bottom objective is 157.17. We've got nothing here, but keep an eye on that 136 even level in the notes. That's the double bottom objective. If when we see that, and I mean, and the notes are still 2 full points away from their target, from their objective. So if we continue to see the yield curve flatten, and I talked about this earlier, if you missed it, sorry, you should have been here earlier. But if we continue to see the yield curve flatten, these bonds, I mean, what do I always talk about? I love when the bond market leads, and and these bonds are leading the way, and and that's the 30-year, and if these bonds lead the way, we're going higher. And why are we going higher? Because no one believes it. No one does. I've been the only bull all year. I remain bullish. You hear people talking about the bonds going down. We're in a bubble. We're in a bubble. Yeah, you know what? Sell a few bonds. Make my day. You know, I don't know. Anyhow, okay, what else do I have written on my chart? Let's have a quick little look at the Apple chart. This is a good little chart here, actually. Whoa, Apple's down 530. Yeah, good night, Irene. Anyhow, yeah, so you want to be long of Apple. I can't remember what I wrote over the weekend about Apple, about the market, but I remember like, oh yeah, and you want to buy Apple at 547. Yeah, okay, good. You can have some. Um, what have I spoken about all year? And this is serious. This is serious. And I just spoke to my mate in Gibraltar recently about it. Um, One stock does not make a market, right? One stock does not make a market. This stock right here has proven me wrong all year. I was wrong. Apple was up 75% for the year at the 705 highs. And at this point, the NASDAQ was up 25%. I think the Dow was up 13 or 14%. Yeah, that now I remember what I wrote in my weekend commentary. Do you realize where the Dow is trading, as of Friday, that the Dow was up for the year for 2012. Now this has been a real good year, right? 2012, has been a real good year for the stock market. The Dow is up less than 5%, and the trend is lower. 5%. That's it. How good is that? That doesn't sound like a good year to me. So anyhow, one stock does not make a market. Look, and how do you not love the bear? Look at this move. This is God love. Long live the bear. You know, this is you know. And how about the people here at 542 that still haven't gotten out? You know, when will they start panicking out? But one stock does not make a market. This market turned on September 21st, and Wall Street turned shortly after that. So Apple proved me wrong on the way up, and Apple has proven me wrong on the way down. Proven me wrong that one stock does not make a market. Proven me right that I keep on saying Apple led us higher, Apple's leading us lower now. Sold, 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 sold. You just keep on selling it. And so far, you know, so far it's been a nice trade for us. So anyhow, this kind of was a head and shoulders top to a certain extent. No, actually, it wasn't kind of. It was, and you could draw your neckline in through here. We had to return to the neckline, but the way I look at this is a measuring gap, and a measuring gap is found, like I've written here on the chart, is found during a rapid straight line price move. The gap represents the midpoint of the price trend. The objective is 501.38, and so you basically measure from the breakout area. So the breakout area would be where we finally broke out. This would have been the neckline of the head and shoulders top. So we finally broke out, and so I measure from here, from this top here, which is 652.79, to the middle of the gap. The middle of the gap is 577.31. That's a $75.50, you know, difference, and you subtract that from the middle of the gap, and that gives us 501.83. That's how you measure. That's how you do a measuring gap, and I think we're going there. You know, until we get there, I'm going to stay bearish. You know, plain as can be. And remember, it's a rapid straight line price move. So that's why I don't feel that the lows are in yet on Wall Street. I still like my targets, my 13 and a quarter head and shoulders top. Let's pull those up real quick here. And remember, you know, at this point, I think Morgan and I are going to offer anyone who wants to grab a piece of TLP until the end of the year, something like $199 or something like that. I don't know, $229. I don't know. I haven't discussed it with Morgan yet. But if our service, you can contact Morgan at DTI. Actually, you can contact Morgan. You there? You want to throw in an email? Support at TradingPub.com. I think let me check to make sure that that's his email address. Yeah, that's it. Hold on, I gotta find the screen. Where'd the Novia go? Come on. Yeah, that's it. Support TradingPub.com. Anyhow, here's our head and shoulders top. And you know what I like about this head and shoulders top? No one else is calling for it. And you know what this day here is? This was Tuesday, Election Tuesday. You know, this was, I was in the DTI trade room on Tuesday night, and and Tom asked me to speak. So I came in and I pulled up that Apple chart and I said, let's throw that Apple chart back up. I said, you know what? This was that Tuesday right here, this day here. I said, you know what? I've got 3 consecutive closes below the 200-day moving average. I said, that is bearish. That is bearish. And Obama won, but I'd been writing about that for the longest time. I've been talking about that for the longest time, about a Republican in the White House. If Romney wins, we're going higher, and then we could go lower. If Obama wins, we're going lower, and then we could go lower. And we're going lower. I mean, we're going lower. Long live the bear. Make a decision. On a day like today. I mean, this is a perfect example. This is what I wrote to all my people in 2008. I said, every day you come in to the marketplace to sell it. Every day you sell the market. And on days that it opens higher, you sell twice as much. And today, the market opened higher, and if you sold twice as much, you're taking your profits. Right now, the market's been open for 2 hours, and you make more money in a bear market than in 2 hours than you'll ever make in 2 months of buying the market. I mean, plain as can be. Okay, there's times, and why do I, Chet Fisher, you could type this in, you know the answer. Why do I do pit session charts as opposed to a lot of analysts out there do 24-hour charts? Why do I do pit session charts? He's obviously not here. I do pit session charts for one reason and one reason only. Because guess what? Well done, Mike Madden. Well done. Because we have gaps. Look at this. We have a gap here from December 2011. We have a gap here from November 2011. We have a gap here from August 2010. When this market starts coming off, I mean, I'm sure there's gaps here. Look at it. Here's a gap here from 2009. I mean, this is Dow Futures 8,300. Here's another gap. Here's a gap here. When this market starts coming off, it'll start looking for these gaps, and I will start targeting these gaps. And believe me, in 2008, I would target a gap, and we'd be 60 handles away. Please define pit session. Pit session means basically when the pit opens in Chicago, the CME S&P pit in Chicago. So the pit opens at 8:30 and it closes 8:30 Central Time, and it closes at 3:15 Central Time. So that's some people like to call it the cash market, the cash, the cash Dow sort of thing. So basically, when the market closes at 3:15 Central Time, it doesn't open up until the next morning. So now we have Asia that can move the market. We have Europe that can move the market. So the market could open higher or lower the next day, and that leaves a gap. And that's why, can market, so how do cash market rallies here? Dailies here. I don't understand what you're saying, TJ. But so you show cash market dailies here. Yeah, yes I do. Yes I do. These are and TJ, I know that you get my my commentary. All those charts are cash market, the pit session charts. They're not 24-hour charts because I like the gaps. And this, I mean, what did I write about? What I wrote about this? I said this is a breakaway gap, and the definition of a breakaway gap is you gap open lower like we did. This is the Wednesday after the election. You gap open lower, but you take out a major trend line, support line. It's a major break in the market, which was this neckline. And I wrote on Wednesday, I said this is a breakaway gap. Look for a significant follow through on Thursday. We got that on Thursday. We got it on Friday, and the market still looks like it wants to go lower, today. So anyhow, you measure from the neckline to the head. You add that onto the bottom. I think the objective is 123.50, which is only right down here. I mean, this is 123.54, the 79% level. That's nothing. That's nothing. We could be there in 2 days. We could be there by the end of the week. That's our target. That's the Head and Shoulders top objective. And I feel this objective will be met. I think this market could trade, and I put this up last week, and I'll put it up again. This is a freebie for all the non-subscribers. I tell you one thing. If you're a non-subscriber and we hold this level in here, you better become a subscriber, because we are going to have some fun in 2013. We are going to have a lot of fun, because head and shoulder top formations are my favorite formation. I know the formation. I understand the formation, and we make big money on it, big money. And then we start targeting gaps, and the gap gets filled because the market's coming off big time, and the gap gets filled, and all of a sudden you're not bearish anymore. You're looking for some kind of 24 to 36 hour bounce, and then here comes the bounce. I mean, it's just amazing. We can have so much fun and make so much money. But anyhow, so let's really tighten this up. So if we come down to this level and hold, then we can get that little Santa Claus rally. Come back up here, okay, everything's good, ho, 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 Santa's got to go sort of thing. And then we can build. So this whole thing could be a top, this whole thing here, and this whole thing could be a left shoulder. And if this is a left shoulder, let's go build a right shoulder over here. Maybe, probably won't. The right shoulder that was built in December of 07 in the stock markets, it was much lower than the left shoulder, which was telling me at that time that, ooh, this stock market is much weaker than I thought it was. And it did. I was calling for 8,000 in the Dow when it was 12.5, and people were telling me, get off the crack pipe, and I was wrong. It got down to 6,500, So anyhow, I have a gut feeling that we could trade down into this level, and if it does, I'll start even putting up Fibonacci levels from down here. And I'm pretty sure I have a level. I've done this before. Yes, I have a Fibonacci level right here at 11,963. That's halfway back of this whole move from the October 2011 lows. And so if this market does come off, and if it comes off in a nasty kind of way, we will find support. This old low here, sorry, but is 120, 1200.024, and this is the Dow future. So 11,963. You can read the numbers, and we'll see where it goes. But if it supports here and holds back up, then we'll take our tool and we'll draw on a little neckline like this or like that, whichever way the neckline wants to be, and then we'll look for the market to trade back up. We'll get that slow grind, boring bull market, where in all honesty, if we see that in December, I am stepping away. I mean, I've already stepped away from this market to begin with. I don't like what I'm seeing with regard to fiscal cliff, and that could be another thing. We can get the slow grind in December, and then we could get the kick the can down the road fiscal cliff. We're gonna everything's gonna be fine. Just let us write a few more checks, and we'll be fine. And so we'll get that nice little pop in January, because basically this shoulder here, this is June 4th, and this high here is May 5th. But even here, this is a 4 to 6 week, 8 week sort of left shoulder. We can do the same thing. We could do December, and we could do January, maybe a little bit of January. And because the fiscal cliff is sorted out. Boom, sold. Thank you. And now we're short again. And then if we start breaking those kind of necklines, if we have a neckline down here around 120, you measure from 135 down to 120. That's 16 handles. 135.99, 16 handles, and subtract it from 120. You got a Dow objective, Head and Shoulders top objective, 10,040 or 10,400, whatever it is. It doesn't matter. When we get there, I'll be all over it. And if you're not reading it, those are your issues, because we're going to make a real lot of money selling this market. And just so you all know, on December 8th, I will be doing a webinar, and it's going to be one of these kind of webinars. I'm hoping to do a good hour, if not 2 hours, of one chart after another, but I will also be touting my services. I'll be touting my new prices. My new prices will include 1 free month. My new prices will include, you decide, because I'll be doing it on December 8th. That doesn't mean you can start subscribing on December 8th. You can subscribe to my service starting when you want to start. And you pay one price for either 3 months, 6 months, or 12 months, and add a month onto that. There'll be 1 free month I added on to the end. So if you know you're going to be away for Christmas and you're not getting back till January 10th, you want to start your subscription on January 10th. It runs until February, March, April, May 10th, or whatever, 4 months. So that's the way I'm going to do it. And it's definitely going to be, it's not going to be cheap, but it's not going to be expensive. As a lot of my readers know, Chet Fisher pays me $1,000 a quarter. So it'll definitely be less than $1,000 a quarter. So here's our Head and Shoulders top. Sometimes I venture off the beaten path, and oh well, this is my show. I do things my way, and what I'm really doing is sharing valuable information. I feel same thing. Left shoulder, right shoulder. Here's our head. Here's our neckline. Here's the Wednesday after the election. Why do you want? There's no way you can't buy this market. Look at this. Remember I talked about gaps. Do you really here on this gap is? This gap dates back to August 2nd. This high on this day is 1369.5. What did we bottom out at? You want to talk about gaps? This is why I do these kind of charts. And if you see a technician using 24-hour charts on these markets, those are his issues. He just missed a huge buying opportunity. This low here, 1369. It came Friday morning. This high of the gap, what was I writing? I'm targeting this gap. I want to fill this gap, 1369.5. I think this is 1378 quarter, 1378 and 3/4. That was my target. So when the gap gets filled, we got our bounce. The market bounced all the way up to 1388, almost 20 handles from the gap being filled. But what's the best thing about it is this right here told us where we wanted to cover our shorts, and you missed the low by a half a point if you covered your shorts here when it filled the gap at 1369.5. That's a no-brainer. It's I don't know. But the objective's 1325. I think 1325 comes in around here somewhere. I very well think that we can trade by the end of November down into this 1265 area sort of thing, and then we have the same thing going on with let's then have a 4 to 6 to 8 week rally and go build a right shoulder, and then we can really come off. So that's our E-mini S&Ps, and then we know this baby. How do you not love this? See, and you have to remember, people, technical analysis keys on reversal patterns. And a reversal pattern doesn't mean it's going to reverse. This is a reversal pattern. This is a Head and Shoulders top. And because there's 2 left shoulders and 2 right shoulders and 2 necklines, that's why we call it a complex Head and Shoulders top. And I'll tell you another thing. In 2007 and 2008, the Head and Shoulders top that we built had 3 left shoulders and 3 right shoulders. And the right shoulders didn't even start getting built until the middle of 2008. And when I spotted those right shoulders, I started drawing in new necklines. And it's like, oh my God. And I think the level, I had two necklines that came in at 1100 in this booze. And when they broke 1100, they traded on both sides of 1100 for a couple of weeks, and then they went. And they traded all the way down to like 6,000. I mean, it was a huge play. It was phenomenal. But this is a reversal pattern. You're not long. You are not long. The objective is 25.55. How about the overnight low on Friday? 25.56 quarter. Fill the gap at 25 cents, but we haven't filled the gap during the pit session yet. So this is still my target, 25.60 and three quarters. I mean the Nasdaq's trading 25.73. We're 15 points away, which is nothing. That's a sneeze in this market these days. To fill in this gap, this complex head and shoulders top, there was an objective here, but what you really do, you measure from this head down to here, and you add it onto the breakout area. This is the breakout area. Look at this. Return to the neckline. I mean, this is technical analysis, picture perfect technical analysis. Had the breakaway gap, and now we're going lower. We're going to meet this objective, and I truly believe if the SPOOs get down to their levels, I think this will come down to this 2440 level. And if this comes down to 2440, you'll see Apple through 500, and then let's build some support in here somewhere. I got a gap here at 2375. This gap dates back to January. Maybe come fill that. You can have a down sloping neckline, and then go build that right shoulder, similar to this left shoulder. That's what I'm thinking. And you know what? You can all tell me, get off the crack pipe. You don't know what you're talking about. Well, guess what? I've had this one so far, and and I'll leave this with you. And this is something I shared in the I shared it. Chet Fisher shared it. This is something we've been sharing in the DTI room for quite a while, and I wrote about it in my weekend commentary. I remember in early 2009, even the middle of 2009, watching Obama come on TV, and he's obviously a very good speaker, but I noticed he was almost campaigning. And I remember saying to myself, hey, the election's over. Get to work. You don't need to campaign. Well, guess what? Chet Fisher brought it to my attention. The guy campaigned for 3.5 years. The guy got the stock market up. He was inaugurated January 2009. The lows happened in March. He got the stock market up, and he got it up good, big time. And why did he get it up? Because he was going for 4 more years, and he got his 4 more years. And the market's not up anymore, is it? Well, it's up on the year, but he doesn't need it up anymore. And what he showed me on Friday, when Boehner came on the TV and said, olive branch time, we're willing to work with the president. And he came in on Friday, he said, we're doing things my way. Yeah, whatever. This is what my policies are. We're doing things my way. And, Boehner said, olive branch, the market rallied 20 handles. Obama said, my way or the highway, and the market broke 20 handles. Obama will do things his way. And if you think there's going to be compromises along the way, think again. This whole, and that's why I wrote in my commentary. I'm not trading the indices at the moment. I'm not trading them. I bought the bonds, I bought the notes, and I'm very content to stay in that position. I don't want to be part of that news-driven 20 handles higher, 20 handles lower. Oh my God, what was that? Who said this? He said that. I don't want to be part of that game. But what I'm trying to say is they got this market puffed up on air. It's up here on air. And I think it's coming off. So when Valerie Jarrett makes a comment before the election about we're going to do it our way this time. I don't even know who Valerie Jarrett is, Chet, but I'm sure you do. You love all that reading stuff. So I think the campaigning was over. Oh, yeah, there you go. So anyhow, the complex head and shoulders top objective is 25.55. I've been writing about that since we broke up here, and nothing's changed. 25.55, and I think we go there. So that's that. One last chart here. Here we go, another 45 minutes. I do love to do a 45-minute webinar. Here's our euro currency. There's obviously meetings going on. I don't know what the result is going to be, but the euro's up a couple of ticks. You know, if worse comes to worse, this is going to be an inside range day, even though I do think we're going to get some kind of announcement here. An inside range day after all these consecutive lows means tomorrow the objective, the target would be to trade above 120. Obviously, if we trade below this low, you don't want to be. I don't want to buy this market. I think it's had it. You know, we had the big move up, we had the correction, we had the retest that fell well short, and now the market's coming off, and it's stair-stepping lower. And look at this big rally, couldn't hold. This was after the election, couldn't hold. Rally on Friday, couldn't hold. You know, market keeps on coming off. I'm bearish. I think we're not only going back down to test this 2051 level, but let's throw this chart up. I haven't put this out in my weekly commentary for a while. You know, mind the writing. But this is the left shoulder, head, right shoulder. Here's your neckline. Neckline did come in at 120. I'm sure by the time I move this over a couple of months, it's probably still around 120. And we get through 120. You measure from here to here, and you add on. I think the objective is like 80. So you want to play with technical analysis? Let's play. You want to earn some money? Send Morgan an email and get on. You want to read one of the best daily commentaries in the business? Get on. Yeah, I'm patting myself on the back. You know, when I get it wrong, I put it right in my commentary. I was wrong. Let's move on. Guess what? I haven't been too wrong lately. You know. So that's about it for the time being. I love this chart. Look, oh my God, soybeans are down another 46 cents. Whoa. I've been putting this out lately. Seems like when the highs come in July, sometime the lows end up around November, December. So I think the beans come back down to this level, and I think they come in by November, December. Well, I can't believe the beans are down 46 cents today. Cool. Show me the ES daily once again. Why? I'm just messing with the chat. What do you need to see? What are you spotting, old boy? Come on, share with me. What are you seeing that I'm not? Is that the current contract? Yes, it is, Jeff. I don't know if it's November anymore. They might have rolled it to January. I would like to see the type. Which one? This one? Or these up here? I mean, this is this. I mean, it's 9 1/4 handles. I'm looking for the setup today. You know, Chet, you gotta first off, it has to. You know, when I call it a tight range fade trade, you know, first off, it needs to follow through in my mind, and it hasn't really followed through lower yet. And if it does follow through lower, the spoos need to get below 1369. So with today's high at 1381, that wouldn't be a tight range fade trade anymore. You know, if what this really is an inside range day. But you know, I mean, what are we seeing today? We're seeing holiday trade. It's not it's not, you know, it's just not working for me, sort of thing. So I don't know. A lot's going to happen with this. Right, a lot's going to happen with this meeting out of Europe. I think if anything happens, you're going to hear, let's kick the can down the road a little bit. And I mean, they've been kicking the can down the road for 2 years, and nothing's going to change. Why is Greece still in the news? Why is Greece still moving markets? Come on. Anything else? Anything else you want to talk about? Any charts you want to look at? Anything? Any questions? Not that I'm the smartest guy on the planet, but I know how to look at them. I know how to look at a market, and oh, look at Apple down 730, 539.90 with a low of 538.65. How low did they get on? What's this low here? 531 something? 531, baby. If Apple goes, the rest of the stock market's going with it. Gold. Well, I'm a kind of a I'm a long-term bear in gold, but I would hate to wake up in the morning and find out that Israel just bombed the hell out of someone, because then gold would be $50 higher. So I'm going to sit on the sidelines and I got in late. Did you do corn? No, I didn't. There's nothing going on in the corn, Jimmy. The beans, I just did the beans. Corn's coming off. They're coming off. But you know what the story is. We'll leave that alone until next year. I thought you were a tile guy. Yeah. Very funny. Um, yeah, Mike Madden got mad at me last week. So anyhow, so yeah, gold. I mean, I don't trust it, but I'm not going to. I'm not going to. I'm not going to sell it. I'm not going to buy it. I'll tell you one thing. I will sell gold if it gets below 1520. Because then we could be going to 1250. But I'm not going to sell it up here, because you could sell it up here, but I'm not going to buy it up here either, because there's too many people who have bought it up here, and I don't like to have anything to do with a market that everyone's long of. If anything, I think you got to sell it. But my son Santino is going to be trading gold next week, and he's going to be scalping the PowerPoints, and I'll let him trade gold. So, anything else? You know what? This is what man did to me last week. Yeah, let's cancel that. Here, here, here. Have some fun with that. Yeah, I know. Here, Mike. I have the power. I love you, Madden. I don't know. Can I use the word dickhead here? All right. Anything else? I see people typing. Tony, yes, I'm going to be there I'm flying in Friday morning. I'm flying out Saturday afternoon. I don't know when I'm going to find time to write my weekend commentary, but I'll figure out one way or another. You going to be there, Jeff? Probably be writing on the plane. I'll try to get my chart work done on Friday night. Yeah, right. Anything else? Any other questions, comments? Anyone want to subscribe to my service and make some money? All right, that's it. I thank you all for coming. I'm going to have to change the password from Chicago to something else next week. I forgot to send out an email. Thanks, Mike. And oh, hello, Louise. Hey, you were supposed to call me last night. Um, I was sort of looking at all those what we talked about, the PowerPoints. I'm not sure how they played out, but I would imagine there was money to be made. So, all right, that's all I've got. Cheers. Thanks for coming. Next week there'll be a password.